Hello, hello, hello. Today we are looking at the order block finder. This is the MT4 version, but there is also an MT5 version. I'll show you the settings first of all. Here we have reversal speed. Now, as you know with order blocks, let's say this was an order block as defined by the indicator here, then the speed or the volume that the price moves after the order block is created is this number. A higher reversal speed means the price would have to move further, and a lower one obviously wouldn't have to move as much. If you have it as a higher number, you'll get fewer signals, but there will be much more of an expansion of the price after the order block. And obviously, if you have it lower, then you'll get a lot more signals. They won't be as accurate, so I wouldn't do that. Then, of course, you have the time of day, and then whether you want alerts to email just on your MT4 terminal or MT5 terminal, and whether you want them to your mobile phone. If you do use this one for the email and this one for the notifications, you do have to have that set up in Tools, Options, Notifications here, Push Notifications and Email. If you're not sure how to do that, then just Google it. There are loads of videos on how to do that. Now, when you get a signal, this is what it's going to look like here. When you get a signal, there are rules to follow to make sure you don't take signals which haven't got a high probability of working. Even when you follow these rules, not every signal will win. We know that. This is Forex, but you can increase your chances of winning by following the rules. With these trades also, you normally get a high risk to reward. So this stop loss here, which is on Euro USD M15, would be about 11 pips. Okay, and the target, if you were targeting here, would be about 50 pips, so that's 4.5 to 1. Okay, now how do you decide and how do you trade these? So you'll notice that when the signal comes, it isn't an up arrow signaling buy now. It is this arrow which I use to indicate a pending order. So this would be a buy limit, which means when price comes back to this, then it will activate the buy, and this is for your stop loss here. Now you can choose, if you see the stop loss here, you can see that is where the order block is, this one. Here is the order block, the last down candle before the up, or the last up candle before the down. So there's the last down candle before the upwards move, okay? So some people use the wick of that candle. I use the wick plus 1/10 of the ATR. Okay, and by the way, on this arrow, to know where to put, if you're using the arrow, you put the buy limit order just underneath the head of the arrow there, and then the stop loss here, as you can see, is it will be just below the low of either of the first big candle here, sorry, the first up candle here, or the actual order block itself. It will be just under those two, whichever is the lowest. Now, some people also will look at this here and put their stop loss down there. You decide. What the indicator shows is the low of either the first candle after the order block or the order block itself, whichever is the lowest, and it goes 1/10 of the ATR below that. That's what I use. Now, how do you decide whether this is a valid signal or not? Well, first of all, after the order block has been created, there must be a new high form. You must get break of structure. If you don't get break of structure, then it's not a valid signal. So you can see here's a high. So we're coming down here. This came up. It did not break that high. This came down, formed the order block, and came up to here, which did break that high. So we have now a break of structure. So now we're looking, where would the take profit be? Well, you could actually use that as your take profit there, and if you think that's the right place for it, or you could come up to here. If you look at here, using the banker candle, the institutional candle order block strategy, you look for liquidity, and can you see all these price rejections here where people will be probably selling and having their stop losses just above here? That's what the institutions are looking for. So there's a lot of liquidity around this level here. So that's probably where I would choose my take profit. So here we go. We place a buy limit here. Price comes up, it breaks this high, so it's now a valid order. If it did not break that high, and it comes, I would still not have placed the order, or I'd be watching the price. And if it then comes down to break the stop loss before it goes up to break the high, that's also an invalid trade. So if it had come up from here to this level, not breaking that high, and then come down to the stop loss, then that's not a valid signal. So, but it has broken it. So here we wait, come down, it gets activated here, comes down to about there, doesn't break our stop loss, and goes up to our take profit, which is there. And what did we say that was? That was about a 4.5 to 1, wasn't it? Okay, let's have a look at a couple more examples. Right, this one here, we're going to look at, well, obviously, after the signal was created, it did break this high. Okay, so we've got new structure broken. We'd have to look far back to see where our take profit was. Let me just mark this so we know where we are. Okay, so we'd have to go look very far back. So what I would normally do in a situation like that would be go up to a higher time frame and look for a take profit. So what we'd be looking for, we know it's broken structure. Does it reach our take profit before it gets activated, which would be over here? If this was our take profit, then the trade comes up, doesn't activate it there, and it goes up to our take profit, cancel the trade. Okay, let's have a look at another one here. Let's look at this sell signal here. Okay, so here we have lower highs, lower low, lower high, lower low, lower high, lower low. So we know we're in the downtrend here. We break this one. Here's the signal. After the signal, it breaks this lower low. Okay, so we've got our sell limit in here, stop losses up here, and you can see it does that. It comes back, taps in nicely, and then goes down again to wherever our probably here. There's a lot of liquidity around here, isn't there? Can you see all this double bottom there, etc.? People will be buying from there, etc. So probably all the way down to about there, which gives us about 93 pips from 12, what's that, 7 or 8 to 1, can't work it out in my head, 7 or 8 to 1. So that's how you do it. This one here, okay, where would the take profit be? Well, the take profit probably would be around about here. And if you also see this, it's not moving particularly in any one direction. That one wouldn't be a good trade, particularly with the size of the stop loss too. But if you decided to take that, then your take profit probably would be here, and you probably cancel the trade before you get in. Okay, but if you didn't, then that would be a loser. This one here. Now, here's the signal. Does it break structure? Well, this is the last high before it starts going up again. It did not break structure. In fact, what it did do was create a lot of liquidity right around this area. So there's probably a place where it's going to come back to later to catch all these stop losses above here. And in fact, it does. Look at that. That's probably news, but it comes back and it collects them all. So this one here, it did break it. Okay, so you have got a break-in structure for this one because it broke this low here. So you've got your sell limit in here, and it depends what you're using for your stop loss. If you used that, it would trigger and go straight through. If you use this, it would trigger and go straight through. But I suspect this was news. If you look at the speed of the movement there, up and down with these wicks, and obviously what you want to be doing is, if you've got news coming and it's approaching your buy limit or sell limit very quickly within one candle like this with this distance, pip distance, then just cancel the order because it's probably going to fly straight through. So that is how you trade these. Remember, you do need to watch the price as it's approaching. For fast approaching, cancel it. Does it hit your target before it comes back down? Cancel it. Or does it not break structure? It's not a valid trade. But if you follow those rules, you will get a high win rate and you will get a high risk to reward. So let me know if you've got any questions. Bye now.